Hello and good morning and welcome to the Short Vol Show. Um, I do want to make a correction from yesterday. I do apologize for I missed something, of course, which I'm sure was fairly obvious to most people that watched the show. And what I missed was the reason why we did gap up on Sunday evening, and that was due to the Steve Mnuchin comments on the various press on Sunday concerning the trade war with China and it being the tariffs not being imposed anymore on China. And there were subsequent announcements yesterday from China about their sort of retribution tariffs not being imposed. So I did miss that reason for the gap up. And, it just goes to show that one source on YouTube is not going to be sufficient to get all your news from. My hope and desire for this show is that I can bring you from time to time something original and unique, and hopefully draw from various spots that I follow, so that you don't have to follow all of them. I was doing a sort of a list of things online that I'm into, and you realize that's a lot of stuff yesterday. So, for example, I'm involved on Facebook, Seeking Alpha, Talking Markets, Twitter, YouTube, Instagram, to name a few. And it's interesting in the trading world. A lot of traders are still kind of like old school in that they a lot of people I talk to will say, oh, well, I'm only on X, like I'm only on Twitter, and I'll say, well, come join the Facebook group. No, I only do Twitter. Or and I know that the average, it's widely reported that the average age of the sort of the Fox News viewer is like in their 70s. What's less widely reported is that that's the same for the MSNBC viewer and basically all cable news viewers, is that they've lost the younger audience. And by the younger audience, I don't mean like 12-year-olds. I mean like 40s, 50s, and below are not watching quote-unquote traditional media anymore. And if you really want the whole picture, you've got to go out and seek it from these various different sources. But the good news for David Lincoln viewers is that I try to go to those different sources for you, so that if a big debate is happening on Twitter in the VIX, and for some reason these days Twitter is a big spot for excuse me, kind of like the breaking debates on the VIX. And part of it, I think, is that a lot of these guys who are fund managers and pro traders are, I think that they're a little bit limited as far as their company policies on where they can go to things. And another part of it is just people don't want to like have to check all these different spots and be on all these different spots. So it's been a bit of a struggle for me to get convince some people to go onto the Facebook group, because they don't want to add just another platform. And I know Facebook's had some bad press recently as well. So let's check the markets out overnight. Not a super amount of action. Europe was down a little, and now it's slightly up. Asia was down a little. We currently have gold up and bonds down. Major indices futures are up for the equity markets in the United States. The VIX down a little bit, down 10 cents right now, just dipping below that 13 handle. And VIX futures down a little too. So essentially, VIX futures are where they were hanging out all yesterday afternoon, which is the front month future, the M1, around 14. It was hanging out around like 1370 yesterday afternoon with the VIX higher. So VIX, the roll, as people call it, or I like to call it the spread between spot and M1, expanded to about a point. It was contracting yesterday afternoon to around 70 cents. What does that mean? It doesn't mean a whole heck of a lot, but we just continue to watch these minor fluctuations in the term structure because it's interesting to a few of us. Very few people in the world are very interested in these small fluctuations in the term structure, but for those of us who are, it's fascinating stuff. So I continue to sort of report on that. I did get some criticism for not really responding enough to comments, so I am pulling up the comment section today. Of course, there's nothing on when I actually look at it, but sometimes I just don't see it. But anyways, I'm promising to be more involved in the comment section. So anyway, I wanted to go over today a trade I did yesterday. I know everybody is not into options, but this is just a pretty simple options trade that I did want to discuss in UVXY. And yesterday, with UVXY dipping below 11, and it got down to like the 10, I think like 86 level. Let's take a look now at the, let me see if I can get, there we go. UVXY did dip below 11 yesterday, and I was feeling like, well, I need to take a win here and lock in a little bit of a gain after all the debacle that happened to me in February. I did want to lock in a little bit of a win here. So let's see. So yesterday, according to this chart here, it got down to 1082 was the low. And then it had this little pop in the afternoon. So when it was down here in this area, or like I think I looked at it was like 1087 or something, I bailed out of my July 10-13 put spread. And if we look at the option screen, UVXY here, and if I actually kind of have to move myself out of the way here, so let me do that. Let's see. Make myself smaller here. Okay, so if we do look at the options screen here, so we're showing July 13 puts 305 bid at 325, and I was long these July 13 puts and short the 10 and 9 puts against them. So I did get out of this spread, and then with a little rally in UVXY up to 11 and change, it got up to like 1125, 1130, 1135. I was looking to reestablish my short, and so the August options came online yesterday with 88 days till expiration. And I noticed there was like small volume in the 10 puts. I've got the volume numbers up here now, so, and I guess it's slightly off your screen maybe. Let me see if I can move this over slightly. But essentially, is that better? And then, of course, I'm right in the way of it again. Let me try to do this one more time. But essentially, there's not been a lot of volume yet in the any of these strikes because this stuff just started trading. And you can see the open interest now. It's showing as just 45 in the August 10 puts here. I ended up buying August 10 puts. The market here shows 141 bid at 161. I paid about 150, 150. I think I paid 150 and 153 for some of these puts. Just small. You can tell it's small because there's only 45 open interest total. And just put them in my pocket. And the reason I bought these puts is because they just seem kind of dollar cheap to me. With the underlying 11 and change. That's only a buck and change away from the strike, and with 80 days to go. And I know the VIX is pretty low in the range now, around 13, but it could conceivably go lower. It could conceivably get to 12. I think no problem. I don't see any sort of wall here. I don't think there's really a wall for the VIX until you get to around 10. I think if the VIX got to around 10, you definitely see like the media chirping and chirping and chirping about that, and people might come in and kind of try to defend that level a little bit, certainly. But with 80 days to go and just a buck and change out of the money, I think it's a good strike to own. However, when you look at this does cause you a little decay. I think for every 10 options, it's probably like $10 a day for every 10 options, the decay on these. So I did want to do something against them. So, well, what could you do against this 10 put? Well, there's a couple things. You could hang out and wait and see if we do move lower. You could sell some of the 8 puts against them. If I paid $1.50 for these August 10 puts, if I go ahead and sell the 8 put for 50 cents, then I'm paying $1 for this $2 put spread, the August 8-10 put spread. There's $2 between the strikes. If you pay $1 for it, essentially, if on August expiration, UVXY is 8 or below, you're doubling your money. So you're paying $1 for this spread. It could go to $2 maximum. So you could double your money. Doubling your money sounds like a good deal in basically 3 months. But it is a little aggressive because you essentially need you need vol to kind of stay here or go lower because basically contango is going to help you a little bit, but if vol spikes a little bit, it's going to bring you out of that 8 range. So it's an aggressive trade. A lot of times when people do these spreads, they are doing some sort of at the money thing where all they really need is UVXY to end sort of right where it started to make money. So a lot of people would do like the 13-11 spread instead because a little less aggressive to expect that, okay, well, UVXY is around 11 now. If a UVXY is around 11 in 3 months, then you're a winner. That's a little less aggressive for a put spread for somebody to do. Well, what else could I do against being long these 10 puts, August 10 puts? Well, I could say to myself, I don't think it's going to get to 10 in the next week or two, and so I could go and I could sell the June 10 puts against the August 10 puts. So I could go, all right, sell the June 10 puts for, say, 30 cents. For, say, 15 cents, and take a little bit of the decay out of the situation. Now, that doesn't seem like a good deal for me. I don't really want to sell anything for like 15 cents. And, it saves me some decay, but if we do go through the 10 strike, then I'd either have to cover the 10 strike or the stock would get called away from me, and I don't really want it to end expiration getting put some of the underlying. So that doesn't seem like a great deal to me. Could look at like sell some July 10 puts for $1, but that kind of defeats the trade for me because once again, if by July expiration we're below 10, all of a sudden the ETF gets put to me, and I don't really want to do that. So my best, but the problem with buying this August 10 put and then just trying to leg into one of these lower puts is that if we do get a spike, I'm just kind of stuck holding the bag on these 10 puts, and they could just start decaying against me. And then, if we get a spike, I either have to hang out and just kind of hope and pray, or just sell them out for a loss. So there's no doubt that I am making a directional play in UVXY here that's kind of aggressive. And so I'll monitor it over the next couple of days and see what I'm going to do against them. Anyways, that's that for that trade, and sort of a little analysis of that trade. And I am looking at my comments here. And hi, Seth, what's going on? Hi, Seth and Seth. and welcome. And thanks, Seth, for the compliment on closing the position. Yeah, so it's kind of a weird situation here. In that the VIX is kind of low right now, and I sort of have a sense that like it's not a bad backstop for either flattening out or heaven forbid getting long if we get some sort of spike. We do have contango going against us, however, so it's not, the lower this gets, if VIX goes to like 11, then you really it can be kind of hard just to stay short these ETPs, but as long as we're in contango, they will continue to decay. But there's less of a case, let's say, with VIX 11 than with VIX 16, of course, to be short these things. But here I feel comfortable. Like I said, this put $1.50. Okay, where is it really going to go to? Even if we get a spike, VIX up a point. The market makers who are trading UVXY, they're going to crank volatility a little bit, and this put could stay at right around at like $1.50 or $1.40. It's not going to go that much lower, because if we get a little spike, they're going to crank all these options up. Because if we get a volatility spike, then the market makers are, people will start coming for options, and there's people out there in retail and elsewhere that if they see a spike in the VIX, they're going to say, oh, well, this is a good time to buy puts, and it's going to go back down. And they might not be that price sensitive, and they might just pay the offer on whatever puts they see. And so it makes sense for market makers to crank volatility a little bit if UVXY goes up. Conversely, if UVXY goes lower, you could see them take down these 10 puts, and maybe with UVXY down 50 cents today, these puts might not move at all. And that's just kind of the nature of the way this trades. Now, UVXY down 50 cents and these puts don't move at all. I know that we're getting closer to strike and these puts have value, and it doesn't really concern me if they don't move them today with a little down move, because I know that they can't go that much lower, and at some point you're through strike and you're talking about them having actual intrinsic value. So that's where we stand. If you notice, this is, as I said, the second day that August is trading, and so you get some wacky prices still. If you look at the 4 puts on the screen here, you're showing no bid at 207, and we saw some, they have some crazy wide markets during the day. At one point, the 9 puts were like 30-cent bid at $2 or something. So the 9 puts were offered at a higher price than the 10 puts, and you get some wacky quotes. So you really want to be careful at evaluating these bid and offers, and make sure that if you are trading these things, that you're bidding or offering inside the market. And one way to evaluate them is to look at them versus other months. So the 10 puts right here in August, 141 bid at 161. However, you want to look at, okay, well, that's August. Let's see where the Sep 10 puts are. Okay, they're 191 at 210. That's a tighter market there. Okay, let's see where the July 10 puts are. Okay, they're 98 cents at 112. Tighter market once again. So we know that July has more liquidity. It's been trading for much longer, and so does Sep. And you want to try to kind of get a sense of lining stuff up. Now, the other point that I wanted to make is that we can pull up on Thinkorswim here. We can go and pull up implied volatility, and that's going to show the implied volatility of the bid on some of these options. And you can see that line here where it's showing 102 vol, 106 vol, 110 vol, etc. And the same thing on the puts. But I just wanted to point out that the if you want to lock in this volatility level, if you want to say, okay, I'm buying 100 vol, if you just buy an option, you're not locking in any vol. You're just buying an option. To lock in a vol, you either need to sell another option against it, or you need to hedge it with the underlying to lock in that vol. Because otherwise, you're just buying an option. You're not buying a volatility level. To buying a volatility level would be to you'd have to hedge it against something to lock in that volatility level. Okay, so anyway, good article by Seth Golden on his website, phenomgroup.com, which I am not just plugging because he happens to be watching. I was planning on plugging that before. I like to. This is another one of the resources I like to check out. And a funny meme too, which makes a very good point. I'm not sure if I'm trading better or the market stopped going down. A lot of people jump onto the bull market and do really well. I actually had somebody come up to me at a cocktail party just a couple days ago, and he was actually the DJ for a wedding that I was working at, and he had this list of stocks that he had, I guess, a broker or somebody, a book had told him to buy. I think it was a book, and it was like a bunch of the FANG stocks plus like a Square and some other ones that had done really well. And the point I made to him was that, like, well, pretty much if you bought any tech stock or any stock in this bull market, you're going to do well over the last 3 years. And not to downplay the fact that he did buy stocks and did make money on them. That's great, and it takes some doing in itself just to take your money, invest in the stock market, and that's a good thing. But everybody makes money in a bull market if you're just long the market, and remember that, because then when things start going lower, you want to be careful, because everybody loses money when you're just long stocks in a bear market, conversely. And what's up? Contrarian. Always interesting to see the different names that you go by on different media. So let's see what else we have today. It's kind of a mixed bag as far as the markets go, and not a whole lot going on once again. So I won't bore you by just going on and on here, and have a great day today. Appreciate you watching the show, and I will check you out next time.